Good morning, all of you. So, accounting standards, one of your subjects in semester 3, we will meet twice a week for accounting standards. It means in 1 week, you will have 2 sessions of accounting standards and 4 sessions of income tax. Okay? Just give me 1 minute. So, accounting standards. What is the meaning of accounting standards? And why do we learn these particular standards? We know accounting. We have learned the accounting, basics of accounting since 11th standard. Then why we need to learn accounting standards? Any idea? Class, please reply in chat box. Why you are going to learn accounting standards? You know the basic concept. You know the double entry. You know the rules. Debit what comes in, credit what goes out, golden rules, all the golden rules of accounting. Still, you have to learn accounting standards. Why? Anyone can answer me? No one? चलो अमृता, धीमंत, कृतिक, निष्ठा, जय. Let me give you the answer. Accounting standards are a particular set of accepted principles, set of accepted accounting principles, and it is the procedure that the business reporting entity must follow. Like a partnership firm or a company, all have to follow this set of standards. It means accounting standards. If you know the cash system or a mercantile system, somewhere it is written down value method, somewhere it is straight line method. I'm talking about the depreciation. Some business follow cost system for recording the closing stock, but some of the institutes or some of the entities follow market value to record the closing stock. So what are the disadvantages of this? Because of all these things, you cannot compare your business with others. You cannot get the overall idea of market. Are you getting me? For example, if one industry is following straight line method in while calculating depreciation and another is following written down value method, so you cannot compare the financial statements of both the companies. One company is following cost method to record the closing stock, but another company is following market to record the closing stock. So you cannot compare both the companies. Why? Because you know that the value of closing stock will impact the net profit. If closing stock increase, then net profit will also be increased. If closing stock will be decreased, then net profit will also be decreased. So if I am following cost method, then obviously my closing stock will be less. So net profit will be less. Similarly, if I am following market value method for recording closing stock, then obviously generally the market value will be high than the cost value, because we have purchased the goods earlier and right now due to the inflation, obviously it will be high. So my closing stock will be high, then my net profit will be high. Are you getting my point? So to mitigate this type of errors and to formulate a standardized policy, accounting standards comes into the existence. Okay. Are you getting my point or not? You have to be active. You have to reply me in chat box. Okay, yes. Hemant, Krutik, Devans. Okay. Let me share the PDF file first. This set of rules means accounting standards, are known as GAAP, generally accepted accounting principles. What is the full form of GAAP? 1 mark question can be asked. So GAAP means generally accepted accounting principles. What is this generally accepted accounting principles? Any standards followed by any country all over the world are termed as GAAP. For example, in India, we are following accounting standards. So our accounting standards will be known as GAAP of India. GAAP of India means GAAP, generally accepted accounting principles of India. For example, in US, they are following their accounting standards. So their accounting standards will be known as GAAP of US, generally accepted accounting principles of US. And for us, it will be international generally accepted accounting principles, because we are not following their accounting principles. We are following our income means accounting principles. So generally accepted accounting principle refers to a common set of accepted accounting principles, standards, and procedures that business reporting entity must follow. Business reporting entity. It's not business entity. The entity who are reporting their financial statements must follow when it prepares and presents its financial statements. Anyone can tell me what is the meaning of financial statements and which statements are included in financial statements, which accounts are included? Anyone? Financial statements includes which accounts? Balance sheet, okay, very good. Profit and loss account, yes. So profit and loss account, balance sheet. Profit and loss accounts includes trading account. Okay, so trading account also included. Income statements, rather we can say income statement. It includes both trading as well as profit and loss account. So trading account, profit and loss account means income statement as well as balance sheet. Then any idea? Let me tell you. Financial statements includes income statement, that is your trading account and profit and loss account, balance sheet, cash flow statement, and all the other statements like shareholders equity. Okay, so here in PDF file, it refers to a common set of accepted accounting principles, standards, and procedures that business reporting entity must follow when it prepares and presents its financial statements. So while preparing financial statements, we have to follow this generally accepted accounting principles. Now, generally accepted accounting principle is a combination of authoritative standards set up by the policy boards and the commonly accepted ways of recording and reporting accounting information. It is combination of both commonly accepted ways of recording and authoritative standards which is set up by the board. At international level, such authoritative standards are known as international financial reporting standards. So international level, it is known as IFRS, International Financial Reporting Standards. So we have to remember this full form, obviously. IFRS, International Financial Reporting Standards. At many places and in India, we have authoritative standards named as accounting standards and Indian accounting standards. Sir, अभी तक तो आप ये बोल रहे थे accounting standards and now you are telling accounting standards and Indian accounting standards. Both these standards means accounting standards and Indian accounting standards are same or different. So The answer to that question is different. Accounting standards and Indian accounting standards are different sets of accounting standards. So in India, we are following accounting standards as well as Indian accounting standards. How? Let me explain in Excel sheet. Just a minute. Visible? Excel sheet? Okay. So now, first of all, national standards. And international standards. So, national standard means standard followed by India, and international standards means standards followed by rest of the countries. Okay, so let me write down over here. It is followed by India, and it is international standards followed by several other countries, most probably European countries. Okay, so now in India we are following AS. AS means accounting standards, and in other countries it was followed, they are following, actually they were following IAS. IAS means International Accounting Standards. In India, we were following, and right now we are following AS, but in international level, they were following IAS. But after a certain period of time, over a period of time, they realized that these international accounting standards have some loopholes, some drawbacks. They are not accurate. They are not capable enough to cover all the aspects. So, what they decided to follow new version of International Accounting Standard, and it is known as IFRS, the new version of International Accounting Standards. In PDF file, we have read that the International Accounting Standards are known as IFRS. Okay, so earlier it was International Accounting Standards, but over a certain period of time, they realized the loopholes, the drawbacks of that International Accounting Standards, and to mitigate that errors, they decided to introduce the new version, that is IFRS. Now, as these international accounting standards and our accounting standards are very much similar. Both these are very much similar. But now, internationally, they have decided to follow IFRS. So, we have to change according to the international market. Why we need to change according to the international market? Chalo, anyone can tell me why we need to change according to the international market? As United States of America have followed the IFRS or UK followed the IFRS, we have to switch to the new accounting standards. Why? Anyone can tell me? To do business with other countries. Exactly. Very good. I want more replies. Okay, so foreign entities can compare the financial statement for investment. Exactly, Dhiman. Very good. So, as in other countries, they are following international accounting standards and we are following accounting standards. So, if foreign countries want to invest in India, so what they will check? They will check the Indian company's balance sheet, profit and loss account, and they directly compare the accounting of our companies with their companies, and net profit ratio, stock ratio, GPNP, something like that, and they find that yes, this is the company that we are looking for. We are now ready to do business with your company, something like that. But now in international level, they switched to new accounting standards. They have new standards, rules, policies. But in India, we have the old policy that was framed with international accounting standards. So we have to move towards the another set of rules. It means IND AS, Indian Accounting Standards. It means IND AS, Indian Accounting Standards. We have two choices. Either we can completely rely on it and adopt directly IFRS. Either we can adopt IFRS, or we have another plan to converge. To converge. What is the meaning of converge now? Converge. IFRS. Converge means not to adopt directly from IFRS, but to prepare the set of rules of our own country, but in accordance with the IFRS. But in accordance with the IFRS. Government of India told ICAI, Institute of Chartered Accountants of India, either to follow the IFRS itself, or we can converge the IFRS and prepare our set of rules. So we choose to follow our own set of rules there. So we have prepared the converged version of IFRS, and then Indian accounting standards came into the existence. So this is the story of Indian accounting standards. Now I told that Institute of Chartered Accountants of India has prepared this. So the body who prepared this is accounting standards was prepared by ASB. ASB, Accounting Standard Boards. So similarly, Indian Accounting Standards was prepared by the ASB. And this IFRS was prepared by IASB. Let me write down here. IASB, International Accounting Standard Board. IFRS was prepared by International Accounting Standard Board and IND AS prepared by Accounting Standard Board. Clear up to this class? All these things we will learn in PDF, okay? So don't worry, I am just giving you the introduction. In your module number 1, we will learn all these things. What is the meaning of IFRS? What is the meaning of IAS, IND AS? Okay? Now, आप सबको एक क्वेश्चन होना चाहिए, सर. We have started with GAAP and we concluded with AS, IND AS, IAS, IFRS. But so, sir, what is the meaning of GAAP? GAAP कहाँ गया? So all this AS, IND AS, or one minute. All this AS, IND AS, IFRS, IAS, all these are GAAP, Generally Accepted Accounting Principles. Okay, this is Indian GAAP, this is International GAAP, this is Indian GAAP, and this is International GAAP. All these are known as Generally Accepted Accounting Principles. Clear? India and US, United States of America, converged these IFRS and prepared their own AS. But some other countries has directly adopted this IFRS and started following the IFRS. But India and US has followed their own Indian accounting standards. Means in US their own international standards, and in India IND AS. Okay, so now several companies are following IND AS, and rest of the non-corporate sector, they are following accounting standards. Now again, let me share a PDF file. Visible? Visible or not? Okay. So now this is all about GAAP. Accounting standards are written policy documents issued by the government with the support of other regulatory bodies, that is Ministry of Corporate Affairs, that is MCA, issuing accounting standards for corporates, in consultation with NFRA, National Financial Reporting Authority, covering the following aspects of accounting transaction or the events in financial statements like recognition, measurement, presentation, and disclosure. So, what is this? It means accounting standards are written policy documents, and the regulatory bodies like MCA, Ministry of Corporate Affairs, this is the regulatory body of corporate companies. They issue the accounting standards for the companies. So with consultation with NFRA, National Financial Reporting Authority, they issue the accounting standards which shows the recognition, measurement, presentation, and disclosure. It means these are the ingredients of financial statements of companies. So ऐसे accounting standards बनाए जाए जिसमें all these things will be included like recognition, measurement, presentation, disclosure. So the ostensible purpose means direct purpose. The main purpose, direct purpose of the standard setting body is to promote the dissemination of timely and useful financial information to investors and certain other stakeholders having an interest in companies' economic performance. Accounting standards reduce the accounting alternatives in preparation of financial statements within the bonds of rationality, thereby ensuring comparability of financial statements of different enterprises. Okay, so ऐसे accounting standards बनाए जाए जो accounting alternatives और comparison easy बनाए और investors can look to invest in that particular companies. So it cannot mislead, accounts cannot mislead the investors. That's why accounting standards came into the existence. Now, let me show you the chart. This is how accounting standards came into existence. Introduction, objective, benefits of accounting standards. Accounting standards setting process. List of accounting standards prepared. List of accounting standards that we will discuss later on. Then need for convergence to the global standards. I told you. Why need? You answered that to do the business. So in international level, in IFRS was followed. So we convert the IFRS in India and concept of Ind AS came into existence. Then curve outs and curve ins that we will discuss later on in this chapter only, and then roadmap for Ind AS implementation. Now, government has prepared international standards, but how to implement this standard? So government has set up the roadmap to follow this Ind AS, Indian accounting standards. How to implement all these standards in so government phase by phase means one after another has given the notification. Now these companies has to follow this particular Ind AS like those capital was is more than 500 crores has to follow this particular Ind AS. After 1 year, the companies with 250 crores or more capital has to follow, net worth has to follow particular accounting standards, something like that. That all these things we will discuss in this particular chapter, but later on. Right now, I won't be repeating all of you. Your concept regarding accounting standard is clear or not? You know what you are going to learn in this particular modules or not? Reply in chat box. What is the meaning of accounting standards? International Accounting Standards, IFRS, Ind AS, GAAP. What are the roles of MCA? Okay, very good. So now, accounting standards deal with following aspect. What are the role of accounting standards? First point, recognition of events and transaction in financial statement. Measurement of these transactions and events. I think in 11th and 12th, you have studied what are the meaning of event and transaction. What is the meaning of event and what is the meaning of transaction? In foundation also, you have learned in your, I think, first and second semester accounting, you have learned what is the meaning of events and transactions. So recognition of these events and transactions in financial statement, then measurement of these financial statements, then presentation of this financial statement, presentation of these transactions and events in financial statements in a manner that is meaningful and understandable to the reader. For example, ABC Private Limited has formulated their financial statements, but no one can read that. Okay, no one can understand what is the meaning of the financial statements. Then what is the meaning of that financial statements? If I cannot read that financial statements, will I invest in that company? Obviously no. If I am unable to read that financial statements, I am unable to understand the financial statements, then I will definitely not invest my money in that particular company. So accounting standards help in recording the events and transaction, presentation of the transactions and events in financial statement in such a way that it will be meaningful and understandable to the readers. Next point, the disclosures relating to these transactions and events to enable the public at large and stakeholders and the potential investors in particular to get an insight into what these financial statements are trying to reflect and thereby facilitating them to take prudent and informed business decisions. So this is most IP lines. Okay, why accounting standards are followed? It helps to take the prudent decisions. Prudent means ડહાપણ ભર્યા, ડહાપણ વાળા decisions કે ને, કે wise decision. Wise means clever decision. So when I can take the prudent decision to invest in Reliance or invest in Infosys after reading the financial statements, okay, so when I come to know that this company is better than this company after reading the financial statements only, so accounting standards help them to prepare financial statements in such a manner that it will be helpful to public at a large and stakeholders. Stakeholder includes shareholders, debtors, creditors, investors, analysts, promoters. Okay, you all know that in economics you have learned that. Clear? Table given below that accounting standards deal with the aspect of accounting events like recognition. Read the first line only. Yo, recognition, measurement, presentation, and then disclosure. Look here, recognition, measurement, presentation, and then disclosure. कनेक्ट कर पा रहे हैं आप? आई से कनेक्ट बे वस्तु क्लास? So recognition of event, transaction, okay, measurement of the transaction and event, presentation of transaction and event, and then disclosure. Now let me give you practical example. For example, in a company, in one company, let's say Reliance. So in Reliance, Nita Ambani has given, for example, this is hypothetical example, has given 5,000 crore rupees. Okay, 5,000 crore rupees. Nita Ambani was not the shareholder. He was not, sorry, she was not the, she is not associated with Reliance. She is outsider to the Reliance, but she has given 5,000 crore rupees to Reliance. Okay. So now company has stated that these 5,000 crore rupees are our capital. We have introduced capital. So shareholders say, wow, 5,000 crores capital. This is very good company. We can invest in this particular company. Wow, very good. But if you see the background, that Nita Ambani was not the shareholder, she was not the promoter, she has no relation with Reliance. So this will be considered as loan. It is not the capital, it is loan. Are you getting my point? It is debt to the company. It's not the capital. So as an investor's point of view, company has taken loan. Company has not proper enough fund to do the business. So 5,000 crore is not the it's not the like capital, it's borrowing. Okay, so we all know that जब borrowing बढ़ती है तब company अच्छी नहीं, it's average company, it's not good for the company. Okay, so we cannot take the prudent decision by showing that 5,000 rupees as capital. Rather, accounting standard says that this transaction is not your capital transaction, it's your loan transaction. So you have to show that 5,000 rupees in secured loan or unsecured loan, but not in capital account. Okay, so this is how the investor can take wise decision. Okay, so first of all, recognition of transaction, then measurement of transaction, then present that transaction in loan, not in capital, and then disclosure requirement. So then disclosure will be given that this 5,000 rupees, 5,000 crore rupees will be given by Nita Ambani to Reliance Limited, and this will be the company will give back this amount within 5 years, something like that. Okay, so investors can connect this thing and choose that whether to go for Reliance or to go for the other companies. Clear? Now, following are the benefits of accounting standards. Mainly, there are 3 benefits of accounting standards. Here, chart is given. Standardization of alternative accounting treatment, first benefit. Then comparability of financial statement, then requirements for additional disclosure. These are the benefits of accounting standards. 1 marks or MCQ or 4-mark question can be formed from this particular point. So let's discuss one by one. First point, standardization of alternative accounting treatments. Accounting standards reduce or eliminate to a reasonable extent any confusing variations in accounting treatment and presentation of economic events while preparing the financial statements. The standard policies are intended to reflect the consensus on accounting policies to be used in different identified areas. For example, inventory valuation, capitalization of cost, depreciation, etc. I have given you the examples at beginning of the lecture, like what type of inventory valuation we are following at cost or at NRV. NRV means net realizable value, or at market value. Which type of depreciation we are following, straight line method, WDV method. So standards are intended to reflect all these things. Since it is not possible to prescribe a single set of policies for any specific accounting area that would be appropriate for all enterprises, it is not enough to comply with the standards and state that they have been followed. We cannot say that all the Indian companies have to follow this particular policy only. Like at cost or market price, whichever is lower, or at market price. Okay. Various industries demand various policies. The policies followed by jewelry business cannot be similar to the policies followed by the scrap business, plastic business, FMCG. Okay, so all the business demands various policies. Single set of policies cannot be followed by all the companies, all the industries. In other words, one must also disclose the accounting policies used in preparation of financial statements. Now, your first AS, accounting standard first, disclosure of accounting policies. This is your first accounting standards, disclosure of accounting policies. We will see the list of accounting standards, don't worry. Okay. For example, an enterprise should disclose which of the permitted cost formula weighted average has been actually been used for ascertaining inventory cost. Point number 2 we will discuss in next lecture because it is already 11:45. So if you have any doubt, then please raise your doubt in chat box, unmute yourself. Otherwise, you can write down your enrollment number in chat box. Okay. Thank you, class.